Alright guys, I want to teach you today on gap trading. Welcome to this live broadcast session. And this if you've been in the market for a while period of time, you discover that gaps created in the market. These gaps are created as a result of your broker uploading data to your trading platform either during the week or during a weekend like this. And in gap trading, there are two scenarios that are often seen when you are trading gaps, right? There are two scenarios that you often see when you are trading gap. Scenario number one is what I'm going to show you using EU, Euro USD, one of the major pairs that are traded in the financial markets every week. And then the other scenario I would show you using boom and crash, and just to enable you see that it's possible for you to trade principles that are profitable in this market using any market, whether it's stock, whether it's boom and crash, whatever market you are trading, you can use it to trade. I want to keep this video simple. I want to go straight to the point, so let's dive into how to trade gap. The two types of gap that I've seen so far in the financial market over the period of 6 to 7 years I've been here around. I want to show you how do you trade it, how you can be profitable using it, and how you can just make money out of it daily. Even if you don't know anything, this is simple enough for you to still make money every day as you want. So let's get straight to the point. So first of all, the first scenario is that you will look for where the gap is. Go to where the gap is. So this is EU, so we'll be looking for where there is gap in this market, and then we'll now strike. Yeah, so let's look for where there is gap in the market. There is no obvious gap here. Still looking, we're still searching. There is no gap here that I've seen. There's no gap. Where are you? Good. Now we have a gap here. There is a gap here. It's so obvious. Now, in situations like this, when I see gaps like this is the first scenario, please. When I see gaps like this, the first thing I want to do is to mark out my gap, just like I just did. I just mark out the space, the point where there is a gap in the market. We mark it out, right? And then when I mark out my gap, if it's like this, I will just extend my rectangular tool to the right hand side and then watch. What I'm expecting is I want to see a pin bar printed for me. When I see a pin bar or a rejection, a sign of exhaustion of the market, and it has also filled in the gap I drew, I will take my trade. Immediately the pin bar just closes. Immediately the pin bar closes, which is this, I will take my trade. When the pin bar closes, this pin bar, when it closes, immediately I'm taking my trade. Let me pick out my pin bar for you to see. I pick out the wicks of my pin bar, and then my stop loss is just 3 to 6 pips below the wicks of my pin bar in case of liquidity sweep and the likes of them. So this is the maximum point I'll put my stop loss, and that's it. Nothing more, nothing less. My take profit now will be, I'm taking the trade immediately the pin bar has formed. So my take profit will now be the next candle. My take profit will be 20 pips after the next candle, which is my entry. My entry is the next candle, which is this. So I have 20 pips. Now this market has moved more than 20 pips. That's good, but our target is 20 pips. Just take 20 pips out of the market. With one lot size, you have 20 pips. That's $200, and then just do your maths. 2 lot size, that's $400, and the likes of them. And you are risking just 6 pips at most, 3 to 6 pips at most. So that's it. That's all you do. Picking 20 pips out of the market consistently when you have gap in the market. So let's look for another scenario so that it won't be as if it's just a trial and error. Okay, I think we have one gap here. It's not that obvious, but we can still do with it. Here we have a gap. So here is our rejection. So I pick out my rejection, and this gap is also, and I drag it way far. You can decide to take re-entry when it comes back to your level, but I will not advise that. Although it's going to still be profitable picking out 20 pips on re-entries, but in the case of this, we are taking out, our entry is in the first candle, and then our stop loss is just below, and our take profit is in 20 pips. So these are entry here. TP is here. Excuse me. This is TP. TP is here. This is my entry. Entry. And then this is my stop loss. So you see that it's as simple as that. It's my entry, this is my take profit, and that's my stop loss, and I'm done. So when I take my entry here, I'm gunning for 20 pips. Let's see if market gave me 20 pips. Look at 20 pips at my TP. I'm done and out of the market, and I'm moving. Same scenario applied to other instances. Let's look for more gaps. And I think in a week you may find 1 or 2 gaps, and it's sufficient for you if you are a conservative trader. It's sufficient for you to get gaps and just pick it, and that's the only thing you're going to be trading. So where is, yeah, is a gap. So, and one other thing you'll notice is the gap is more obvious in lower time frame, which is M15, M30, M15, M5, M10, M12, and the likes of them. So you take advantage of those time frames to trade those gaps. I want to look for a third scenario before I show you the other approach trading gap. Beautiful. So this is our third scenario. We have a gap here. There's a gap in the market here. So these are rejections. See where our rejection was printed, showing that there's an exhaustion, and it also filled up our level, our gap, which is this point. It also filled up this gap, which is this point. So so now, yes, it also filled up this point, and this is our gap. Beautiful. So our entry is here. We're taking our 20 pips up above. 20 pips up above. That's what we're taking. Okay. Let me see. And then our stop loss is somewhere below. Stop loss is somewhere below, and we'll take our 20 pips up once we see our rejection, and our entry is the next candle, and that's it. Right, that's for it. Okay, don't know how to remove this. Alright, so that's it. So our entry is the next candle immediately after our rejections, and we take our 20 pips. There we go, 20 pips taken, and our stop loss is just below the wick, 6 pips here. That's our stop loss, and we are done. 6 pips is somewhere here, 60 points, and we are done. So that's that for this approach of trading gap. This is the first scenario of trading gap. The second scenario I'll show you using crash and boom. So let's go to the second scenario.